Talking about the markets now, global markets opened the week in risk-off mode amid tensions in the Gulf. Brent crude surged as much as 13% at one point. Bloomberg Economics estimates that a full closure could push oil prices as high as $108 per barrel. Equities reacted sharply. Asian shares fell 1.3%. U.S. equity futures dropped about 1% at the open before trimming losses, and major Gulf markets saw steep early declines. Several markets, including UAE, are closed for the day. Saudi's benchmark index fell as much as 4.6% before paring losses. As investors cut exposure to risk assets, capital rotated into traditional safe havens. Gold surged more than 2% at one stage, briefly crossing $5,380 per ounce. Silver also advanced sharply. The Swiss franc strengthened to its highest level against the euro since 2015, while U.S. Treasuries initially gained before giving up some of those advances. The U.S. dollar rose modestly, though analysts note that this episode is testing the greenback's traditional safe haven status amid policy uncertainty. Energy stocks, meanwhile, outperformed broader markets. Saudi Aramco roughly rose 3%, while Australian energy producers posted gains of 5 to 7% on expectations of sustained higher crude prices. Energy markets remain the key transmission channel to the global economy. For Europe, which is entering its natural gas storage refill season at relatively low levels, higher energy prices could add fresh inflation pressure. China, which is the largest buyer of Iranian crude, is also in focus, as any sustained disruption could impact trade balances and currency flows. Investors are now scenario planning. A limited conflict could mean temporary volatility, but a prolonged closure of Hormuz or the broader regional escalation would risk a renewed oil shock and potentially another inflation wave, just as global central banks navigate fragile growth.